Let's get back to the markets. Talk technicals with Katie Stockton of Fairlead Strategies. She's the founder and managing partner and a CNBC contributor. Let's start. We'll try and touch on everything, but let's start with the S&P, which has been slowly, steadily, not even slowly, but I don't know if it's melting up yet, but it's been an impressive advance with no pullbacks, with no 2% pullbacks.
It's true, yeah.
What does that mean for how the duration of this? And is it broadening at this point?
Yeah, I think it is healthy as long as it has that broadening trend. The breadth has been incredibly strong. Yesterday was a great example. We had NVIDIA pulling back, and yet the ratio of up to down volume on the NYSE was 6-to-1. So we've really seen breadth kick in here. The cumulative advanced decline line for the NYSE is at a new all-time high. And that's really as of yesterday. It's not a decisive breakout. That would be another positive development. But just generally speaking, we do want to see the breadth data trending higher with the market. And I think that's what contributes to the sustainability.
What was your last resistance level when you were on? Because we're past that,
Oh,
right?
goodness. Yeah, I know. 48.19 was final resistance for the S&P 500.
now you don't know. Yeah.
Well, now it's NA. So,
right.
I think we were able to arrive at upside objectives. There was one from a breakout we had in Q4, and that was around 52.20, which, guess what, has been met. So this would be a natural place for consolidation, but we just don't have indications of that right now. The momentum's still, as you know, very, very strong. And we can arrive at a more aggressive target from that breakout above 48.19 of about 61.20. And it's been our belief that that's more relevant for 2025.
Okay, 2025. So at this point, what is within the S&P or within, let's say, like even include the Russell? Is it small caps now outperforming, or do they still have more work to do to catch up?
They definitely have a lot of work to do to catch up, but we have seen some signs of strength there, both in absolute and relative terms.
Is that bullish?
2000. I think that's also bullish. It reflects the breadth expanding to small and mid. It shows risk appetite, and we're seeing that in other asset classes as well. So generally speaking, quite good, and it doesn't look nearly as extended just in its appearance as, of course, the S&P 500 would.
How long would you say gold was in a consolidation phase? How many years?
It was multi-years. Multi-year, yeah, something
Almost.
Close to that.
So where could we go?
Yeah, the breakout above that 2063 threshold was a big deal for us, and it allowed us to arrive at an objective intermediate term of about 2280. That's not too far off, but longer term of about 2500 for the price of gold. We think it'll be sort of a slow-moving ship that direction, but the momentum is there. And even right now, as of yesterday, we have what looks like, we call it a flag breakout on the charts. It's when you have a sharp up move, consolidation, and then a short-term breakout. So,
in a similar vein, I guess, if you believe that it's digital property, Bitcoin is also NA for an upside objective, is it not?
This is true, yeah. New all-time highs, that's what happens. And, I believe in the uptrend, at least. It has very good momentum. The pullback that we saw, it looks like nothing on the chart. It's pretty remarkable because it was 18% of downside, but it looks like a blip.
That is nothing for me.
It really is. And now, of course, within days, we've had a resumption higher. So I feel pretty good about the trend there as well. The breakout creates a long-term catalyst for Bitcoin, too. It's always going to be higher beta. The spread to the 50-day moving average, I looked at it this morning, it was something like 14% versus the S&P, which is about 4%. So those are initial support readings. But that's just the risk that you take by
commodities
investing.
In general. And we actually, a couple years ago, that one guy we have on, the oil guy, said we're in a super cycle. We in a super cycle? Commodities are rallying, aren't they?
And it feels also broad-based.
That's what I mean.
In the commodity complex, right? So I think we really need the energy complex within the broader commodity space to kick in a more meaningful way.
Even though it's at 80.
So there's resistance for crude oil around 83. Above that, we start talking about mid-90s, and that to me would be more meaningful because it still looks like a long-term trading range. I think the stocks are anticipating that kind of breakout. We've had really good action bottom up recently in the energy sector. They're still mostly range bound longer term, though. So it's not decisive yet. And then nat gas is nat gas, right? We have a proper downtrend there.
Cocoa. Becky likes the crappy little hollow bunnies instead of the
Easter.
instead of the solid.
Well, the kids don't want the solid.
I hope people get you a lot of those things that just crumble in your.
They just sit on your counter, half eaten.
Yeah. You never eat any of these things, right?
I know, it's true.
No. So let's not talk. Let's talk 10-year. The 10-year note. Then what's your latest read on what's happening there? Because now I don't know if we're going to get cuts or not. I don't know whether.
Curry. That's what I was trying to figure out. Jeff Curry, right? I've been sitting here wrecking.
I mean, you could see both sides of it, right? So the end result on 10-year yields has really been neutral, a bit of a tug of war in the action yields. In the consolidation phase, we've been saying we could see maybe 4 or 5 out of the 10-year before it rolls over again. But the loss of long-term upside momentum is pretty meaningful behind yields, and that goes across the spectrum. So we feel that it's capped in a way. So it may be more of a neutral to lower environment that characterizes this year and part of next.
That's a big statement. Mm-hmm. I mean, that's if we knew 4.5 was it, that says a lot about it.
I'll make it bigger when I actually think mid-3s is realistic for the next year or so.
Well, that says, then you're telling me where inflation's going to be then too, aren't you?
Yes.
It doesn't look like it's going to rear its head back to 40-year highs, causing 7 or 8% on the 10-year.
I would say no, not based on what we're seeing
maybe
now.
Waller
The momentum
shouldn't be so.
there.
Maybe we ought to cut then. And I mean,
look, to be fair, Waller said we need to. He said he needed to see at least a few more months' data before he would feel comfortable cutting. He didn't say no to this year for sure. Yeah. He said now that he feels uncomfortable with the last couple of months' data. He thinks if they're going to cut, they should see a couple of months.
The market definitely liked that.
Yeah,
for sure.
Show it coming back down. Just to be safe.
Right. I don't know whether the 10-year controls inflationary expectations or vice versa. Yeah. It's sort of the same.
It's remarkable how 10-year yields used to drive the market last year, and now it's NVIDIA.
Yeah.
Right. So the focus has changed. And I think it's really just because it's been more neutral. So it's not a directional bias that you can.
What's NVIDIA's chart look like?
It's been parabolic almost. And
it's another NA.
That's true.
It is.
And we have actually one of those DeMark counter trend signals, Tom DeMark's indicators. It's a short-term signal that it reacted to over the last 2 or 3 days, and it would suggest we see another week or two of downside, which would be, it shouldn't be a big deal, but it would feel like it because it's really not looked back. So I think a deeper pullback is likely, and it'll be interesting to see how the market fares through that.
That could be the 2% pullback in the market that could coincide, or maybe it won't.